We've had the good fortune to work with thousands of founders. If you look at founders who are not so successful, startups who have failed, their reaction is most likely, Acha, why did this happen to me?
Today, our guest, Sharath Shyamasunder, is the managing partner in a firm called the Startup Zone in Bangalore. Throughout his career, he has worked with hundreds of startups, helping them with incorporation, compliances, and fundraising readiness. Over the last decade, Sharath has seen hundreds of founders closely during both calm and crisis, giving him a rare insight into what actually separates those who survive and those who collapse. This is a conversation about the mindset that defines the difference between success and failures. This is the real insider's opinion. Let's get to it. Sharath, you run a company called Startup Zone in Bangalore, right? And Startup Zone, as I know, has helped from last 10 years thousands of startups in running smoothly, dealing with their compliances, getting funding, and all sorts of things in their journey, right? So, how was your 10-year experience with working with so many startups, so many founders?
So the journey has been very, very exciting. So the reason why we started Startup Zone is for businesses to grow without any worry. So the way we do it is being very, very sensitive of the time, understanding what the founders need, because one thing what they lack really is the time, and because they are involved in so many activities. So Startup Zone, by virtue of taking care of a lot of these things, which is compliance, right from your setting up of the business, taking care of all the statutory registration, filings, accounting, intellectual property registration, drafting of agreements and contracts, right? So we take away this pain so that they can focus on what they're really building.
So, from all these years you have worked with so many founders, what I am interested in is knowing that what your experience has been. Uh, what is the pattern of a successful startup? What is the pattern of a startup that they're not doing right, they might fail? I think after working with so many founders, you must have got a hang of it.
Sure. See, mostly the startups are a reflection of the founders, right? So the way they operate, the way they react when there is a setback and things like that. So a typical successful founder plus successful startup, they react to these setbacks very, very differently. They're like, chalo, what is the next plan of action? That's their immediate reaction. They, of course, dissect, take a step back, and what should be our next move, right? Whereas if you look at founders who are not so successful, startups who have failed, their reaction is most likely, Acha, why did this happen to me? So if you see, there is a stark difference in how the founders think.
So
right?
probably the successful ones are not taking it personally.
True.
Right?
And
is that what you're saying?
Personally, and also they are up for the challenge. They are able to reflect, use their experience, take help if required, be shameless about it, and so they are able to take the situation head on. Right, so that is really, really important. And also the resilience, because the setbacks are fairly common in a startup journey, right? You keep many startups face that fairly regularly. There could be minor setbacks. So how do you react? How does the founder react to that, or the team reacts in general? I feel defines the path.
Do you have any examples?
So I can very, very interesting examples. I can give you a couple of examples. One is game theory. Founder's name is Sudeep. So their first setback was the COVID lockdown, right?
Oh, yeah.
So due to the lockdown, naturally, most businesses or establishments were shut down,
right,
and they operate swimming pools. If you recollect, they were the last to sort of open, right, even after the movie theaters.
Right. Yeah.
Right? So huge setback, and that's their cash cow. So and very, very the situation was such that they had rentals to pay, etc. Very tight situation at that point of time.
I can
right?
understand.
So what they did was they sort of sold their assets, liquidated their assets. When I say these are not personal assets, they had deployed certain assets in these swimming pools. They had to sort of sell it, use that money to pay the rentals, pay the employees, and all of that. They took salary cuts as founders, etc. What they interestingly did during that time, and they had a lot of time on their plate, right? So nothing was functional. So they started thinking about what is next. Once we reopen, what is next? So if you look at the sports industry as such, it is mostly adult centric, or there are some pro athletes, right? There was a vacuum when it came to kids coaching. So they had to essentially sell their assets. When I say not personal assets, but assets of the company, they had to sell the assets deployed in the swimming pool at a much lower price, but yet to pay off their landlords, employees, and so on. So they had a lot of time on their plate. So what they planned is for the future, which is once the establishments open after the lockdown, what is next? So if you look at sports industry as such, right, it is focused on adults, it is focused on your pro athletes, right, or semi-pro athletes. There's a vacuum in your kids coaching. So they developed a very, very interesting program catered to kids, right? So which is their flagship program.
Yeah, I know. It is very disorganized kind of.
Absolutely.
Thing, right?
So each coach will have a different
coaches in your locality. There is some coach or something that is very disorganized. I think Game Theory has done a commendable job in organizing it.
Absolutely.
Right?
Absolutely. Yeah. So they worked on the curriculum. How do you sort of go about coaching these kids, right? So they train very differently to your adults. Say, for example, their bat swing is completely different when you compare to an adult. So they had to focus on these areas. And also another pivot which they did was earlier, all their centers were owned by Game Theory. So they also worked on a franchisee model, right? So when the market opened, they reached out to a lot of these investors, so to speak, who were ready to sort of put up franchisees. So they also pivoted and built their curriculum, built a lot of tech around it. So today they're doing really, really well.
Wonderful. As you said, it's a mentality of evolving, right? If you face a situation, how do you evolve?
Absolutely.
Right?
Absolutely.
Yeah, okay. Any other traits that you see based on your experience of working with startups from last 10 years? What makes the difference between a successful and a not so successful one?
I think it boils down to a lot of discipline, right? So how structured you are in terms of, say, in terms of compliance, in terms of how you look at cash flow, in terms of how do I engage with vendors, how do I engage with employees, internal teams, etc. So the discipline has to be there, right? And the discipline is built throughout your journey. Founders who are haphazard, they generally tend to not do well. People who are very, very disciplined, founders who are very disciplined when it comes to payments, how they treat employees, how they manage processes, etc. Right? These are founders who tend to do really well because they bank on a structure. They have a very structured approach to how they operate, as opposed to founders who do not have a structure to operate. As simple as that, right? So this makes a huge difference because you're tuned to work in a very, very particular manner, very structured manner, and sort of apply that to all the processes.
Tell me one example where you saw a structure of a startup or founder putting effort into putting structure, a well-maintained, disciplined structure in a startup kind of impressed you.
So we've had the good fortune to work with thousands of founders. So where there are multiple founders who are very, very diligent when it comes to even right off the bat, right, setting up of an entity, right? They consult us as to what would be the right structure, because that is your fundamental, that is your base, right? Then they ensure that once the company is set up, what are the things which needs to be followed. So if at all they have any doubts or whatever, they definitely reach out to us. This is from a legal compliance standpoint, but also very methodical in how they handle data, how they handle their clients, being customer obsessed, right? So we found this with a lot of founders who are super successful,
Okay.
built businesses, got great
Basically,
exits.
getting into details, focusing on
Yes,
details.
yes.
Right?
And even the minutest of
minute.
things, they are very, very meticulous about it, which gives them the edge, right? It could be a very, very small thing like passing a board resolution, right? Most founders whom we see, they just do it as an activity. But there are some founders who do it in a very methodical way, right? Why do we have to pass a board resolution? What does it entail? So I'm very careful about how an agreement is drafted. So those nuances are very, very important, right?
Okay. What is a very common mistake that startups do and suffer for it later?
I can give you a few examples, not one common mistake which founders do. One is, as I mentioned earlier, right, choosing your structure very early on becomes your base, right? Not everybody needs a private limited company, right? You can start with as an LLP, partnership, one-person company, proprietorship. There are a lot of options, but because private limited is so common and everybody wants to become a director, it's the in thing, right? Everybody wants to become a director. So
but they don't know that there are a lot of compliances.
Absolutely, you're absolutely right. Yeah. It's compliance heavy, right? So you need to understand what are the roles and responsibilities, how you are liable as a director, right? You are liable as a director. So understanding that and setting things right? So many people start as a private limited company where the requirement is not there, right? And end up not complying, realizing that, not filing their returns, etc., which will come back and bite them, right? This is one. Second is finding the right co-founder. It's like matchmaking, right? So finding the right co-founder is extremely important. With complementary skill sets, that would be great, so that you don't step on each other's foot and each one has their own departments to sort of focus on. That also helps. And defining the roles and responsibilities and documenting it, more importantly, right? Because when, in case there is a dispute and the founder leaves, one of the founder leaves, right? And the shares are not being transferred, then it is dead equity. Imagine a founder who's exited still on your cap table, right? You go to an investor and that founder is holding a big chunk of your company, 30-40%, right? It is dead equity because that founder is not working for the benefit of the company. He's just holding on to shares, right? And we see this quite a lot.
Oh, is it?
Quite a lot.
Okay.
So people have exited, yet they're holding 20%, 30% in the company. And when you go pitch in front of the investor, they look at the cap table, 20-30% is dead equity. That's a lot of equity, right? So that is one. Structuring your ESOPs for your employees, right? Typically what we do is we keep the scheme very open-ended at the discretion of the board, because times change. People evolve, companies evolve, right? So if you hard code a lot of things, then changing that becomes difficult. I've seen a lot of ESOP schemes where things are hard coded. Vesting aisa hi hoga, isko aisa hi karna hai, right? So we leave it a little open-ended at the discretion of the board, so that the board of directors can decide, okay, in 2026, this is how I'll operate, so that it benefits the employee. See, at the end of the day, the ESOP is created so that the employees are getting benefited. They make wealth. That's the long-term goal, right? If your document is so drafted that at the end of the day, it is not beneficial for them, then what is the point? Right? So these mistakes are very common.
Okay. What do you think is the funding in the startup ecosystem? What is the funding scenario in the startup ecosystem right now? From last, let's say, couple of years back and to now, the things have really changed, right? Funding, I would say this is the season of drought in funding. Do you think that?
I don't think that volumes have decreased for sure, but the quantum of has increased. Quantum of investment has increased.
Okay.
So,
so a single fund transaction would be more in terms of value, but the number of transactions have reduced.
The reason being, the good startups are getting funded and they are getting bigger checks. That is happening, right? So startups who have raised their Series A are raising their Series B, so on.
Okay.
For a new startup, which getting funding has become a little difficult. So there was a time when ideas were getting funded. There was a time a MVP was getting funded. Right? Today, just an MVP may not cut.
Okay.
Right? So you will need to have real customers sort of paying, using your product or service.
Okay.
Right? So the investors are looking at some traction today.
Okay.
So there was a time when idea would get funded,
yeah.
MVP would get
If
funded.
somebody believes in the idea, they would.
Exactly.
And mostly all these great names that we know, Flipkart and all these names from Bangalore, got funded really at the idea level.
Absolutely.
Right, at that
I can give you a very interesting example. I'll not name the startup for sure. So the startup based in Mumbai, this was about 7 or 8 years back, or a little longer probably, very early in our startup zone journey. Guys were from IIT Mumbai, sharp folks. They had a idea. They had a working website. So the idea was Spinny for two-wheelers.
Oh, okay.
Right?
Okay.
So they will have your motorbike listed, two-wheeler listed. They'll do all the checks, get it serviced, and then people could get on the platform and transact and buy a used sort of two-wheeler. Right? Nothing wrong with the idea per se, but they didn't even have an entity in place. But the investors were ready to put in the money.
Okay.
So they were like, can you help me with the private limited company? I need it within 2 days. Like, what is the urgency? No, the investors are waiting. There was a time like that, without an entity, just by having a website, you could, and an idea, of course, you could get funded. So that time has passed.
Okay. Now it is a bit later in the journey that investors are willing to invest.
So there are some VC funds, angel investors who come in very early. So that is stayed. What has happened is it is a more curated list now. So the due diligence is much higher, right? And also the risk ability has sort of come down. So that is what has happened.
I'm asking you this because you will be the right person to ask it, because all the due diligence and everything, you're the actual person behind the scenes doing this,
right?
Startup Zone,
right?
So you would know the real ground reality of what the funding scenes look like in India right now, especially in the IT city of Bangalore. Right? Yeah. So as you said, it has the funding. Maybe the chunks of funding values have increased, but the transactions have become less. And also it has really gone to a stage where you have to show a real traction, real number of users, and then only most of the VC funds are interested in funding you, which was not the case maybe 10 years back from now.
Absolutely.
Right?
Absolutely.
But what do you see the startups that come to you for helping them with funding? What do you see their requirements? And then on the other side, what do you see the VC funds or the even the angel investors are looking at these days?
Very interesting question. So typically the startups reach out, many startups reach out to check with us if we can help with funding. So that is something which we don't do. We are not an investment banker or an MBA, right? That we are not. So, however, because we have been in the industry for about 10 years, we have worked with a lot of investors, angels, etc. We are happy to share the deck with them. That is something we do. But we don't essentially connect the startup with the investor and sort of facilitate the funding. We do facilitate in some way. The way we do that is once the startup has identified the investor or vice versa, then is when our job starts, right? From vetting of the term sheet, negotiating of the terms with the investor's legal team, helping them during the due diligence process, setting up the data room, maintaining the data room so that the data can be supplied to the investor's legal team, funding support, preparing all the resolutions, etc., filing with the registrar of companies, even post-funding support. That is something which we are really, really good at. So that piece is something which Startup Zone does really well.
Then tell me something about the the structure of Startup Zone. How did it started, and what all components do you have to help a startup in Startup Zone?
Sure. So predominantly we have three teams. So one is the incorporation and the secretarial team, where we help founders to set up their business in India as well as abroad. We also do the corporate secretarial work, which is passing of board resolution, preparing the minutes of the meeting, etc., filing these forms with the registrar of companies. So that is something that team does. That team also doubles up in filing of trademark applications. Then we have another team which does accounting, statutory registrations, and filings. When I say statutory registrations and filings, these are your GST, professional tax, ESI, EPF, right? The third team is the legal team, which drafts agreements and contracts. So it is chartered accountancy, company secretarial, and legal work. So there is a fourth team, which is the sales and business development. So I missed that. So 4 teams essentially in Startup Zone.
And also, Sharath, about the ecosystem, we were talking about the startup ecosystem currently in India. Do you see a lot of startups or companies coming in India from abroad, or maybe companies from here moving out to Dubai or Singapore or US?
So both are happening. In fact, I see a lot of influx into India. At least certain markets like the US, UK, etc. In fact, we have 30 plus clients across the globe. We have clients from the US, UK, Singapore, UAE, Russia. Right? So we have clients from there who have set up businesses in India. Indian companies going abroad, that does happen. The large market is US, because if the startups market is US, where they are selling to US clients, it's good to have a company there, have a local presence there. With respect to Singapore, there was a time where you must have sort of heard startups establishing their base in Singapore. That is no more the case with the Gift City, right? With the new initiative, the Gift City, companies in India can have an establishment in Gift City and get all the benefits which they used to get in say places like Singapore, Hong Kong. So that has changed a little bit. It's still evolving as we speak, but that I think will change the equation quite a bit. The companies which were going abroad, not necessarily for marketing purposes or having a presence there, but so to speak, getting invested, that has changed. And that's going to change very rapidly as well.
Okay. So again, coming to your experience with the founders and the difference between the success and failure. So everybody is chasing funding.
Right.
But do you think that's the right approach?
Why not? I don't think chasing funding is wrong, but that should not be the only criteria. Right? So, see, funding is only fuel. That's not the destination, for sure. I keep telling our founders, right? So you should probably raise funding when you actually don't need it. Right? That's the best time. That's the best time to raise funds. See, at least your initial checks, you will not have that luxury when you are raising your seed fund, pre-seed fund. I understand founders don't have that luxury. When you reach a certain stage, like your Series A plus, right? You should time your funding when you actually don't need it. So you have the luxury to sort of being patient and get the funding on your terms rather than the other way around, right? So not on the investor's terms, but on your terms. So you should time your funding not in distress. So that I keep telling our founders that. And it's also a longer process when it comes to, we are trying to shorten it down by being very, very careful, work with really good speed, maintaining data rooms, as I said. So we maintain data rooms for a lot of startups. So essentially, what is a data room? It's just a repository of all their documents, right? So what we do is all the documents, resolutions, etc. They are sort of put in a folder which is neatly managed, etc. So when it comes to due diligence, we are very quick in our responses. Right? So that's the essence. So you have to be really, really quick. Ask any founder, when do you need the funds? They'll probably say yesterday. So we'll have to be really, really quick. And I've seen a lot of startups take much longer to handle their due diligence. By then, the investors have lost interest, right? So, if you have a clean data room and if you are able to give the access to the investors' legal team and they are able to access it, look at the data, and respond, it also shows that the startup is they take governance very seriously.
Disciplined.
They're more
You can say
disciplined.
that financial discipline is there.
It's very, very important, and they really appreciate that.
Because there have been a lot of cases, and we keep hearing this. There have been a lot of cases when they fabricate the data,
Right,
and just to expedite it, maybe fabricated data
Right.
is being sent to the investors,
Right.
and then things go haywire.
Yeah. We've had instances where you'll be surprised to probably know that I've heard the story, not any of our client, right? So the founder had a very bad CIBIL score. The investors did not invest. That has happened.
Okay.
I've heard stories where the founder had given a personal guarantee.
Okay.
The investors did not invest because technically the shares you hold in the company is an asset.
Is an asset.
If you have given that as a guarantee, tomorrow if something goes wrong, the company is not yours.
Oh, yes.
You have to be really careful. People don't realize it. When you actually sit down and think about it, it feels very logical, right? But think about it. So when founders are in distress, they can take those calls. So you have to be really careful.
Right.
We've had very interesting story. Nothing to do with funding as such, but we had a founder whom we had helped to set up their business. After a year or so, he had supplied his bank statement to us. We looked at the bank statement. We found a bunch of transactions. It said online Rummy. And our accountant came running to me and he was like, "Sir, this is what it is. So what do we do?" Like, very interesting. We've never seen this. This is a new thing. So get on a call with the founder. "Sir, what is this?" "It's his online Rummy." He's like, yeah, I played Rummy. Like, why would you do that in your current account? Right? This is the current account of the company. You are supposed to keep your personal transactions separate, this separate, right? So we ended up saying no to him. We couldn't have we could have probably accounted it, but naturally would have been flagged by our chartered accountant. He wouldn't have signed off. So we politely declined, saying, "Boss, we can't do this."
This was interesting. This was very interesting.
Yeah. We find such stories rare, though. Now what we did, very interestingly, after that, what we did was we do these webinars very regularly. So we try and do it every quarter, and we have our founders who set up their business in that quarter. We invite them to attend the webinar, and there's a do's and don'ts which we ask them to.
Now, this is very important because see, many of the founders do not come from legal background.
Right.
They won't know if in future they have to raise funds, what kind of legal checks will be there.
Absolutely.
So I mean, at some level, probably I'm just giving a benefit of doubt that founder didn't know that I'm paying Rummy from my current account.
I guess so, but
very interesting story, Sharath, this Rummy circle story you have told us. So see, these kind of checks and balances have to be put right, and I think it is comparatively it is easier for an Indian startup to handle these kind of cases or do checks and balances compared to a foreign startup starting their base in India. So you have helped a lot of foreign startups startup base in India. How do you guide them or help them so that such kind of cases doesn't happen?
So at least with our experience, we work with about 30 plus startups. We continue to work with them. So what we have seen is they take compliance a lot more seriously, right? So they ask a lot of questions. Some of it could be very basic, but they still end up asking that. They're very smart, right? So they ask a bunch of questions, very repetitive in some cases. You need to be a little more patient with them. But it's good that they ask us those questions so that they want to sort of be on the right side of the law, be as compliant as possible. So that really helps.
Okay.
Right? So we are calling this initiative Business Beyond Boundaries. Okay. So what we do is we help foreign entities to set up their base in India. And we are not here just to solve their legal or compliance problems, right? A foreign entity can have multiple requirements, not just legal. That is one of their problems,
Hmm.
right? So there are a lot of other problems to be solved. I can give you an example of how we helped a US client to not only set up a base in India, but also continue to support him in different aspects.
Hmm.
So naturally, we did a great job in setting up the business. So they grew very rapidly.
Hmm.
They started with a couple of employees, grew to 5. Then very rapidly, within 6 months, they grew to about 80.
Oh,
So
okay.
there is an HR sort of a issue there,
Okay,
right?
okay.
Then infrastructure,
Hmm.
right? So we mapped them with the right HR consultant who set up processes, help them in sort of identifying the talent, etc.
Hmm.
The second set of the problem is infrastructure. So we helped them to we sort of referred our own vendor whom we buy infrastructure from to
Okay.
them, who was able to sort of help them.
Okay.
Banks, for example, right bank to support them. So this becomes very, very important. So we are trying to build a full stack experience where there are multiple products, services whom we are partnered with, very, very curated partners who can provide high quality service, high quality products. Very important for startups, especially foreign startups. They would require these services or products at some point in their journey. So here we are not only solving their legal problem, that of course we are good at, but we are also giving them an experience or a stack of services and products which they can pick and choose from. So this is an initiative which I'm very, very excited about.
Wonderful, wonderful. So working with foreign startups, founders from outside India, and at the same time working with founders within India, what do you think is the difference?
So as I mentioned earlier, right, one is their approach to compliance, right? So they want to follow the law, they respect the law, although they find it sometimes a little tedious, but we are there to help, right? So they have that comfort there, but they are very methodical when it comes to that, right? So their approach is very clear, and they maintain data very in a very, very diligent manner. That also helps because we would need the data always. And they also, one thing which I've noticed is there is the remarkable difference between a foreign founder and the Indian founder, right, is their approach to people as well. When it comes to building teams, etc., they spend a lot of time in identifying the talent, right talent. They don't mind spending that extra money or time finding the right headhunter, working with the right HR management company, right? So they are very methodical in that way, getting the team right. Because it's extremely important, because they are sitting abroad. Right. They need somebody strong here at a leadership level. Right. So they invest a lot of time there to get the right person there so that the team can be built under him or her. Right. So that is something which I see very often. Most founders, they actually travel to India, spend a considerable amount of time hiring the right person, go through the interviews, they line up into. I've known our clients spend like a day to interview 20-30 people. Wow. So they spend a lot of time and energy to get the right person at the top.
So maybe just one broad point. What is that broad point that you think Indian founders should learn from founders abroad who are setting up business in India?
I've found most of the foreign founders to be extremely disciplined when it comes to how they treat compliance, how they treat processes, how they build teams. We definitely, as Indian founders, can learn a lot of things from them. Okay. And how they are when it comes to asking a lot of questions, right? We sort of hesitate. We think a lot whether will I come across as dumb? Is it too simple a question? For them, nothing is simple, nothing is complex. For them, question is a question.
Yeah, they don't hesitate in asking.
They don't hesitate. They are very open about it, and they till they get it right, they keep asking the same question. I mean, till they understand that, right? Once they understand, they follow it to a T. So we don't ask a lot of questions. They do. That is one difference I've seen very starkly.
Wonderful, wonderful. So I think, Sharath, this has been a great conversation. But I think I have one last question for you. If some aspiring entrepreneurs are watching this show, right, this episode, and let's say even some entrepreneurs who have recently started their entrepreneurial or startup journey, right, what is the one piece of advice from your experience of working with so many founders? What is one piece of advice that you'll give them?
Mm, may not be one piece. I'll try. One is be patient, be resilient, uh, be focused, and this is a marathon, right? And have a lot of respect for founders because they are the risk takers, and we need that breed in the ecosystem, right? So very very important for them to uh, pivot, uh, identify a problem which they want to solve, and also be mindful of how big the problem is, right? If the problem is too small, right, it is not worth solving.
Okay.
Sometimes as a business idea, right, if the business is too small, or if the problem is not an immediate problem to be solved.
Okay.
It is a problem,
Okay.
but can be solved after 5 years. I mean,
Okay.
it can wait,
Okay.
right? That is not something which you should put your energy on. At least that's my belief.
Okay.
Problem has to be big enough, immediate enough, and you have to be super focused on how can I solve the problem and give the best customer experience at the end of the day. So if you are focused on these few areas, not one piece of advice, but if you are heavily customer obsessed, know what the problem is, know how to change course if you have a setback. Be very very clear in terms of how you communicate. I think these are 4 or 5 things which the first time founders can be mindful of.
Okay, wonderful.